Hello, today is the 14th of July, 2011. It is roughly 9:50 in the morning. Silver, well, it's over 39.12 as I'm saying this, but the thing's always changing. It could be well under 39. It could be over 40 when you watch it. I don't know. But what I do know, or I'm very confident, is that this two green candle wave higher has been a two wave manipulated green candle higher to the upside because there's manipulation. Have a hard time saying that, but they have an easy time doing it towards the market. Now, as far as this weekly chart is concerned, many different tests within this little level, and when you have a situation where you're pretty much going down and you can't go lower, meaning you have a sideways level, which we do here at the 33 level, you can pretty much state, well, that's a descending sort of formation. And because of the fact that we've had this two green wave higher, things are really starting to look optimistic, as if the trend is going to go from bullish to neutral and maybe potentially again back to bullish, needing a break above this significant line and then having this pattern go in an upward trend, higher highs and higher lows. And well, if it breaks above it, then that's instantly going to make that to be the case. Some people want to wait clearly for a breakout. Some people want to see it go higher and then come back down to the 18-period moving average as it's going higher. It all depends on what type of level you are looking for and the strategies in which you choose to play. As far as this on the quarter day chart is concerned, we can see that the move has been pretty big, going from about 34 and change to 39 in the equivalency of a little over 2 days, because each candle represents 1/4 days. So it's been a little over 2 days since this bottom, and a gain of a little over 10% so far. This 5-day moving average, which before was extremely choppy, going below, above, below, above, below, it's now above it. However, what you need to see happen for this to be a confirmed intermediate trend, higher highs on this 5-day moving average, is for it to actually hold when it comes back down for support. And there is no reason that has to happen anytime soon. That will either happen on a significant time correction or price going lower. It did manage to go up close to these little band areas, and these are not Bollinger Bands, but they're very close. The way these calculations are calculated is it takes this 18-period average, in this case it's 20, but it takes the moving average and it takes the volatility. Volatility is by taking the highest point from a period, subtracting it from the lowest point, and then dividing again by the lowest point. That gives you the volatility percentage move. Therefore, it looks for the volatility, and using a front-weighted average, when volatility really increases, these bands increase, and when volatility decreases, then they will come together. Sort of like in here, we have this going higher, this going lower. This was telling us that volatility was going towards the upside. Okay, so not much more to say. Former resistance here, $37 or so. The Fibonacci states 36.96. There's your last significant previous resistance. That's still a little ways away right now, given that it's over 39. That's a correction of well over 5%. Okay, next one is the same chart, but just much longer of a time frame. The Fibonacci from this high towards this low gives us $38.11. To calculate Fibonacci, you take the highest point of a period, and in this case, that's $49.81. You divide it by the lowest point. In this case, $32.32. You put this to the power of the Fibonacci, so it's either 38.2% or 61.8, depending on which one that you're looking for. This is a 38.2, this is a 61.8, and you multiply this by the low. The reason why I like this calculation better is because this gives you the exponential levels for Fibonacci, and when markets get really out of control and the levels from top to bottom are extremely big, then this gives more accurate readings to where the Fibonacci pretty much should be. Now, as far as the psychology for what the Fibonacci means, where we are, where we have the potential to go within this market, well, we didn't find resistance at this level. And if we do find resistance, it's going to be that with a major pierce above, similar to this having a pierce above as well. What would be ideal now is to find a way to establish a level of support at this level where it might come up and down a few more times before finally lifting higher. It's no clear-cut way exactly what's going to happen, because if nothing's getting in its way, then it's going to run right up to this $42 level where it again may find resistance. And of course, if it does come up there, you'd be hoping for some sort of move like this to make the market go higher. Of course, that's if you're looking for this on a bullish point of view. Now, yesterday I was talking about a trend line that barely broke. Well, the reason why it barely broke was because it barely got above it, and the move wasn't even finished. And the move still isn't finished for that matter. There's the trend line, and well, it's managed to get above this level right now. And if you do parallel lines similar to this in here, then this does give you areas for where you may find levels of resistance or support. In a bull market, of course, you're looking for resistance. In a bear market, you're looking for support, which means that if we continue going higher or we continue breaking above this level, then this line is an area for resistance. This is an always moving line, so you really can't go too big within the numbers. But what this does show us is that there is plenty of both upside room to hit this level as resistance and plenty of downside room to hit this level as support. As far as patterns are concerned, I was talking about first this double bottom pattern. How I like to do these patterns is you take an equal length of the bottom and the top and then add it to the top part, which came to here, and that's exactly where the market went up to, and that was a successful play. The next one was an inverted head and shoulders pattern, which would look something in the area of like this here. It's broken through and it's continuing to move higher. It really needs to make new highs barely above this resistance to reach the pattern that I was talking about over the last couple of days. And now you got what is a double bottom formation again, a much bigger one than the previous one. A double bottom occurs when the market's going lower. You find support somewhere. That doesn't matter where you find it. And then you come up and you find resistance again somewhere. And then you come back down close to its previous low. And then you come back up close to its previous high. And that's exactly what's happened. It's got to break the neckline. To be a valid pattern, it has broken the neckline. The matching pattern for this would be from the high to the low and be somewhere in the area like this, which gives us a price objective which would be above the Fibonacci level. However, in a case like this, I'm looking at $42.22 on any major moves towards the upside. Again, within this pattern, that doesn't mean now, since we're a little bit above this line, that we're just going to keep going towards the upside. In fact, when you have a confirmed move, all that means is that the probability odds is that you're going to be a long-term winner by making those kind of plays. Therefore, the key thing, like I said, is this level of support. The significant part is building and establishing a pattern of higher highs and higher lows. And when we have this higher high, we have this higher low, and no matter where we end up topping, we will have a higher high. Therefore, to make it easier to make another higher high after it eventually goes down, then you want to find support at least at this level, but I kind of would rather make a higher high above this line, and realistically at 38.811 would be an ideal place. But just because you want the market or you think the market's going to do something doesn't mean they'll won't throw you a curveball. In fact, they like to throw many different curveballs. And I'm going to finally finish this off by talking about the trend line again that I was talking about yesterday, because I talked about this trend line and the matchups to the upside. I gave a little point where if it matches, and it worked out pretty close to this Fibonacci line, at the exact same time, that it would just be a little too ironic. And well, I did some calculations this morning, and I got the computer doing these same differences from top to bottom like we see in here. Same thing, and for it to match at that line that I said yesterday, then it would have to match in or around the area of $41.60 per ounce. And it would have to do it on the morning of July the 21st, which is 1 week from today. And the morning would be defined as midnight to, from 6 in the morning to 12 noon New York time on July 21st, when these things will cross. Now, as far as that level being significant, to me, it would be significant if it does one of two things. One, it's an area where it tops and finds resistance at. And in order to that happen, it's either going to have to correct through price or time before it happens, which it probably will. Or that level is going to have to be significant support, which means it's going to be well above this area before this time even comes from. Maybe the market goes something in the area of, just goes up like this and then back down like that. And then boom, it's off, still races. These significant levels that we talk about, whether it's for moving averages like this, with trend lines or Fibonacci, a lot of times it can be either the resistance or the support, because I was saying on the way down that this was supposed to be big. It's a big level. So if you're looking to buy on weakness, then this is one of the times where you can do it. And if you did that, then you probably would have got stopped out, or you can get back out now for break even. But this was still a big level because it didn't find support here, rather it found resistance. And now that we're at this level, it's good to realize that we are at a massively huge resistance point where we're supposed to find resistance to a degree, and it's bullish to find resistance to a degree. However, as much as it's strong that we will find resistance, on the light, weak chance that we continue to move higher over the short term, then things could very easily get crazy, because when you have a missed Fibonacci point or missed resistance point that has large significance to it and it's missed, I would be expecting a very big fast move, because from very big failed moves can oftentimes bring very big fast moves. Alrighty, thank you for watching this video and have yourself a magnificent day. Bye-bye.